Good afternoon and welcome to the Wilson Investment Properties webinar on industrial properties. We're going to talk about why you would buy industrial properties, what to look for in a deal, and pitfalls to avoid. My name is Rita. I'm the Director of Investor Relations for Wilson Investment Properties, and this is the first in a series on various considerations when evaluating investments. We're going to be talking about different property types and other underwriting considerations like markets in this series. So let us know what you want to hear from us and we will happily comply. But we're going to kick the series off with industrial. So here we go. Industrial properties are one of the least glamorous commercial real estate asset classes. It's really properties that are built for function. There are no elaborate architectural design features, no resort-like amenities, or high-profile addresses. And industrial is really intended to provide practical and efficient space for users who prioritize function over form. Industrial buildings are suitable for a variety of uses, such as manufacturing, research and development, and the storage and distribution of goods. Over the long run, industrial properties are steady performers, which is why they merit inclusion in a real estate portfolio. The average annual return for industrial properties over the last 20 years is 10.6%, which is slightly ahead of the average across all property types, according to the NCREIF Index. That's the National Council of Real Estate Investment Fiduciaries. So before we begin, we will go over what are industrial properties. And there's three main categories of industrial real estate. And the first one we're going to talk about is manufacturing. These are a couple properties that we have in our portfolio. But as you can see, manufacturing buildings are basically big boxes, and they're primarily used for building things. So conversion, fabrication, assembly to make products and goods. These properties tend to have less than 20% office space and can be further classified as heavy or light industrial use. So here are some more examples of manufacturing buildings. Alrighty. The next subset of industrial is warehouse buildings. And these are a couple properties that are also part of the Wilson Investment Properties portfolio. Warehouse properties are primarily used for the storage and distribution of materials, goods, and merchandise. These buildings tend to have less than 15% office space, and modern warehouse properties have high ceiling heights that allow for more storage. This category can also include specialty facilities such as cold or freezer storage for food. Okay, here's some more examples of warehouse buildings. The next subset of industrial buildings is flex R&D. These are designed to give occupants flexibility in terms of the use of the space, sometimes referred to as flex tech space. These buildings are an office industrial hybrid that can have 30 to 100% office build out. Okay. And because industrial buildings require a lot of space, and large footprints. They need access for turning, for the trucks to get in and out. Therefore, industrial buildings are not commonly found in the central business districts. They're usually located outside major cities, and along highway transportation is important for location. Alrighty. Here I am. I've been in commercial real estate for 20 years, and currently I am working with our current and future investors to talk about the opportunities to invest with us. I've been an agent working in the sale of investment property for a number of years, and previous to that, I was doing acquisitions. So I was working with teams buying investment property nationwide. This is an overview of the various property types. It's from Real Capital Analytics. And as you can see, the industrial line is the light blue one in the middle. So prices overall for all property types have increased and continue to do so. But as you can also see, industrial properties tend to trade at a lower price point than other property types, particularly apartments and office. And this is the 2018 average annual returns for the various property types. As you can see, industrial tends to perform quite well relative to the other property types. So another reason why, even though industrial product isn't necessarily something that people get excited about, it does perform very well. So, and let's talk about some of the reasons why. Industrial tenants tend to sign leases for longer terms. So generally speaking, most leases are for a minimum of 5 years. Sometimes tenants will sign leases for much longer, 10, 15, or even 20-year terms. And because the lease terms are longer, the investment tends to be more secure and stable because you have the expectation that your tenants are going to be there for a long time. Also, industrial buildings, again, as you've seen, they tend to be a little bit more bare bones. So from a maintenance perspective, they're lower. In addition, frequently, the leases are signed on a triple net basis. So the tenants are responsible for operating expenses for the properties. So another reason why industrial properties are an attractive investment for investors. Again, they tend to have higher yields, as we just saw. And location is critical for the success of industrial investments. Access to transportation is very important, and particularly when you are proximate to shipping and ports, those become very desirable industrial markets. Let's talk about some of the things to avoid. Obsolete product. So there is going to be an over-under on industrial buildings. Class A buildings are going to have those high ceiling heights. They're going to have all the latest sprinklers and that type of thing. If you are dealing with ceiling heights, and the newer product will have ceiling heights in excess of 30 feet, Older product, Class B product, will have ceiling heights that are under 30 feet. So that's something to consider. What types of tenants are going to be a focus for your building. That's going to be one of the big decision makers for them. Again, keeping in mind that location and access to highways are very important for industrial. Access, egress and is important. Getting in and out, turning radiuses, those types of things are all very important, because while you don't have a lot of people generally in industrial buildings, you do have goods moving in and out of the properties. So anything to make the truck access easier is going to be important for industrial. Sometimes because industrial products, properties tend to have less people coming in and out of them, and because the tenants tend to take responsibility for the operating expenses, and tenants tend to have the buildings to themselves the majority of the time. Sometimes there can be some management concerns. So it really, when you're evaluating industrial property, you really need to make sure to, keep an eye on what's happening at the building, and that type of thing. So what else do we need to know about industrial? So let's see. Intermodal rail, ports, air freight are all important drivers for industrial demand. E-commerce is very important, and that is another reason why industrial has been performing so well, because we are experiencing a lot of traffic with products. And again, this is why access to transportation is so important, because things are moving faster than ever. So that is going to be the end of our industrial series for today. Just in closing, in general, can you just advance, or just go to closing? Yeah. So in closing, Wilson Investment Properties, when you are looking at deals, just some things to think about in general, not specific to industrial, but just in general. When you are evaluating our offerings, one of the important things to consider is the term of the investment. Frequently, our deals are for a 5-year holding period. So that's something to think about. We do have some deals that are for shorter terms or longer terms, but 5 tends to be the average. Paying attention to what's happening with distributions. Some folks like the income, so they need regular quarterly distributions. Other opportunities that we consider do not pay distributions. So that is something, whether you want distributions or not, is something that's going to be important. And finally, just understanding the business plan for the property to help you decide if that is something that you would like to participate in. So just some things to think about as you are looking at offerings from our offices. And let us know what you would like to hear from us about. We are happy to accommodate them on a future webinar. We will be doing these regularly. So please let us know what you would like to hear from us. And we will open it up for questions.